Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Tuesday afternoon, we have Shawn, Cruz, manager of trader services at TD Ameritrade, to discuss Nasdaq-100 performance, trends in the volatility index, or what we call VolQ. We're also going to take a look at Fed rate hike probabilities just on the horizon. Shawn, it's great to see you as always. Welcome back to Trade Talks, and let's take a look at the latest levels in the Nasdaq-100 and VolQ as markets are just moving incredibly fast.
They are, and I think whenever you get the sort of events that we're seeing hit the headlines, and think about it, we're really focused on what's happened recently, but we've really been in a little bit of an elevated repricing environment for equities pretty much since the start of the year is where it really stands out. And I think lately we've seen sometimes where the uncertainty hits such a peak. That's where you see these really long candles on the chart. On days like that, that is where the market is really trying to price in quite a bit of uncertainty all at once, and it's just going to create those sort of moves. So when you see that, I like to take a look at those longer candles that you see up there, specifically the one where we got down about 1,300. I like to focus on that, but when you look at that, that is really the full sort of panic, mass uncertainty type of a day. I think when you're trying to get an idea around a price level that the market is probably going to stick around until it gets some more clarity or a little bit of relief around the situation, I like to look at where it recovers and where you see a little bit more of choppiness in those shorter candles. And we're seeing that right now, right around, I would say just above 1,400 is the area I'm watching for support. And then anywhere up around 14,300 is where I would be looking at the upside.
And Shawn, talk about the 10-year, right? What a round trip on that.
It has been in the 10-year, I think initially when we weren't sure how disruptive this was going to be to the economy, it was really seen as maybe something that would just drive some additional inflation. That was where you saw us run up above that 2% level. And I was curious to see if maybe 2% would become a little bit more of a support area. But I think now it's escalated to the point where there are genuine concerns around what this is going to do as far as inflation being just so robust, so spread across the board, not just limited to energy and a few precious metals, but now we've even seen it showing up in a lot of the commodities. I think the concerns around what this elevated, more entrenched inflation could mean and what sort of response we can get from the Federal Reserve on the back of that is something that has caused the market to now maybe price in significantly lower growth moving forward. And I think that's why you're seeing that 10-year yield pull back and drop the way it has. I think there's also a little piece to that where there's a lot of fear around the globe geopolitically, driving people maybe to the safety of treasuries and US dollar-based assets. That's also going to drive a significant amount of inflows, which is going to push rates lower as well.
And Shawn, let's wrap up and focus on the Fed here for a moment and talking about that round trip theme again. I mean, we were looking at 50 basis points, not even just 2 weeks ago. And now that seems to have been largely priced out and we're back at 25 basis points. What are your thoughts on the Fed?
Yeah, this was surprising to me. I don't know if you call this a chart or a display of the week here to look at an exhibit of the week. But when I looked at this, I was kind of surprised. If you think about it and just looking at the week of February 22nd, we were looking at about 50-50 for 25 basis points or 50 basis points. No move wasn't even being given any sort of credence or likelihood. It was really just, are we getting 25 or 50? If you look at how that's changed, last week we were looking at, as soon as yesterday, we were actually looking at pretty much a certainty of a 25 basis point rate hike and a very, very small probability of a 50 basis point rate hike. So that had pretty much gone off the table. The entire market was pretty fixed on 25 basis points. And now if you look today, it's actually swung in the other direction where now there's zero probability of 50 basis points and there's a slight probability of no move at all from the Fed in this upcoming March meeting. So it's quite the sea change just in terms of sentiment around rates. And it makes sense. You're going to see some repricing in equities when that's going on. So a lot of data coming up this week that you can keep track of. You can keep track of Powell, his testimony to Congress, which starts tomorrow and ends Thursday. And then we also, right as soon as we're done with that, we're going to get the jobs report, which is going to get a lot of scrutiny as well. So I think today is a day to get things right, get positioned, because we've got a lot of potential additional volatility coming into the market through the end of the week, depending on how those headlines flow out.
Yeah, better get the Pepto-Bismol on the desk for what's coming out of the Fed and jobs numbers for sure on Thursday and Friday. Shawn, great to see you as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.